Yo, welcome to the first ever episode of the Jack Mallers Show. LFG, let's go. I am your host, Jack. It is a beautiful Monday afternoon, 6 p.m. Eastern, 5 p.m. Central, 3 p.m. Pacific, where we air our Mailbag Mondays. For those new to the show, here's the deal. You're tuning into what's called a Mailbag Monday. Every single Monday, I, Jack, the host of the Jack Mallers Show, go through what's on my mind as it relates to macroeconomics, Bitcoin, financial markets, and the world at large. Here's how we divide it up. We go half the show, I rant. I speak top of mind. I engage with the chat. The other back half of the show, we do live Q&A. You can ask questions whenever you want, however you want. There are team members in the live chat that document those questions in a document for me to go through at the end of the show. Capiche? Capiche? Because we get started. There are no ads on this show. This is a self-sponsored show. It's about truth, authenticity, and driving the conversation forward. So with that, we're going to bookmark this show, timestamp this show. I'm talking to you guys at a Bitcoin price of $105,500 US per Bitcoin. That puts the total market capitalization of the Bitcoin asset class at $2.1 trillion. We are a mere 3.5% below our all-time high of $109,160 that was achieved January 20th. So we have not seen Bitcoin this high since January of this year. If you keep time in Bitcoin blocks, I am speaking to you ever so gracefully at Bitcoin block height 897,460. Ladies and gentlemen, Bitcoin loves chaos, and boy, do we have a show today because there has been a lot of chaos. So without further ado, shit is hitting the fan. The world is really starting to move. We're getting some action. We're getting some fireworks. For many months, I would say you got to be patient. You got to stay humble. You got to stack sats. Give it 2 to 3 months. Give Trump a little bit of time. They've gotten time, and they're starting to pull off the fireworks. Bitcoin loves it. Bitcoin up above 100K. When there's smoke, there's fire. This asset smells blood. This asset smells blood. And we're going to walk through exactly the blood that I'm referring to, why there is blood in the streets. There's blood in Washington, D.C. So without further ado, let's get this show on the road, ladies and gentlemen, on the road. And as I mentioned earlier on in the show, please, 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 please ask your questions in the chat. I have a team that is keeping track of your questions as you ask them, just so that I don't have to interrupt myself live and answer your questions. I could do it all at the end. So you don't have to wait for me. I don't have to wait for you. Just ask whatever's on your mind, and I will get to it at the end. Okay. So here's where we're going to start today's rant. Last episode, if you haven't watched it, check it out. What we've discussed is this pivot on tariffs. Trump campaigned very aggressively. Tariffs, 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 tariffs. That's how we're going to rebalance the trade. That's how we're going to wane ourselves off our reliance on China. Tariffs, 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 tariffs. We went full maximalist on our tariffs position. The market freaked out. We saw a lot of volatility. We folded like a tent, like a Boy Scout tent selling cookies. And all of a sudden, last week, we mentioned Scott Bessant, Treasury Secretary of the United States of America, went from tariffs. China's going to have to shove these tariffs up their mouth and swallow them whole, to who pays for the tariffs, as you can see on my screen. He answered, it's a complicated question. And we saw a slight pivot on tariffs. We were very confident about tariffs. Tariffs were going to fix all of our problems. We're the United States of America. And, oh, my camera is blurry. Hold on. I'm trying to do high quality audio. I will go lower quality. Let me know if this is any better. Video is blurrier than the US dollar. I just changed my audio or my video settings. Let me know if this is any better. Could also do this one. How's that, chat? Talk to me a little bit. I apologize. Let me see if my team is talking to me at all. Yes, I understand. Everyone's telling me that my video is blurry. I don't know how to fix it, though. That's not very helpful. I know it's blurry. Sorry. Hold on. Not better. My internet is good. It's the camera I'm on. A bit worse. All right. I'm sick of this fucking here's the thing is everyone gives me all this professional equipment and it never works. So what I'm going to do is this. Well, this is quite annoying. I can switch my camera here. You guys want to see a different view of the closet? This is my laptop. Look at that closet. Look at that empty closet. Proof of empty shelves. But how do I get the camera to view me is the question. Why don't we do this? And I will just raise this up so you guys can get to my eye level. Is this any better, chat? All right. Fuck it. We don't care about the video. The chat is saying we just want the screen share and the audio. And we're going to ride with it. All right. Well, I apologize. I'll figure out my setup later. Okay. Yeah, I need professionals. I don't know how to do this. I'm going to blow up my screen share. And there we go. You guys can see my screen. Onwards we go. So we've been talking about how the U.S. government has pivoted from very strong on tariffs, and basically we are going to shove tariffs down everyone's throat. We're the United States. There's nothing anyone can do about it. And all of a sudden we've seen a pivot. Effectively, Trump took a maximalist tariffs position. It didn't work. We saw a lot of market volatility. We saw chaos in the treasuries market. And also, I mean, it needs to be said that we, as the United States, effectively lost the proxy war in Ukraine. There was absolutely a proxy war in Ukraine, and we lost, or you could say are losing. And so our effectiveness to just shove stuff down everyone's throat because we're stronger, more powerful, and have more weapons, that's not necessarily working either. And so we went over this last episode, how we saw a pretty grandiose pivot from tariffs to it's a very complicated question. Next, we went over this last week. We saw the art of the deal. We closed a deal, the greatest deal, the best deal of all deals that have ever been deals. And all it was right here. We've reached an agreement on a 90-day pause of tariffs with China. That was the deal. It was a bullshit announcement. There is no deal. We have to check back in on what we're going to do with China in 90 days. That's not a deal. Okay. And now, so my point is there's been a real dial back on tariffs, a pivot on tariffs. I don't think tariffs are the silver bullet we're looking for. So the question is, how is the United States going to achieve what they want to achieve? Okay. That's the question. And first, before I walk through this idea of capital controls, I'm going to summarize quickly exactly what they're trying to achieve. Okay. So just for all of those that are maybe newer to the show or that want a reminder, a quick high-level summary. The United States runs what's called a trade deficit, okay? That means we export the US dollar. So we print these pieces of paper, the dollar, because we are the world reserve currency issuer. And we import real goods and services. So we are importing food, energy, oil, gas, and we are exporting the dollar. Countries like China run in a trade surplus. Countries like the US run in a trade deficit. So China is making $1 trillion annually exporting stuff into America. Okay. They're making my iPhone. They're making the camera that supposedly doesn't work, or my internet that supposedly doesn't work. And they're making $1 trillion. The US is in a massive, massive deficit. Now, when a country like China operates in a trade surplus, here's what happens. So they make $1 trillion, let's say. They have to invest that $1 trillion somewhere. Where do they put their profits? The profits are actually reinvested back into the United States. That's the problem. What actually happens is China cannot take their $1 trillion a year of profits and invest it into their own country, because that would actually strengthen the yuan. That would strengthen the local currency. They don't want a strong local currency because that would weaken their export business. Okay. Their export business is just predicated on cheap labor, their ability to acquire cheap goods and cheap labor. And in order to have cheap goods and cheap labor, you need to have a weaker currency. So they have all these profits, and what they've traditionally done is buy U.S. assets, buy U.S. treasuries, buy U.S. real estate, buy U.S. farmland, buy U.S. stocks. Okay. What this has done for the United States is it's driven a massive wealth gap. Those that hold assets get exponentially richer. Those that don't get exponentially poorer. And what we've seen in the United States is we've outsourced and delegated our middle class. We've outsourced and delegated our manufacturing belt, our rust belt in the middle of America. The middle of America has been hollowed out, both literally and metaphorically. Okay. We cannot manufacture anything anymore. We do not have a middle class anymore. The rich are getting exponentially richer, and the poor are getting exponentially poorer, all because the surplus of global trade is being piled into buying U.S. stocks, U.S. real estate, U.S. farmland. And so those in New York, those in Silicon Valley are swimming in it because China's buying Facebook stock. China's buying NVIDIA stock. China's buying all the real estate that they like. And those living in the middle of America are being robbed. And so what the United States is trying to do is reorder the capital flows to protect the American. We've heard Trump, we've heard Bessant say, we're working for Main Street, not Wall Street. Main Street's got a bad deal. What about the Rust Belt? What about those that had jobs manufacturing stuff for the world? What about those that aren't in finance? What about those that aren't in technology? What about those that aren't working on the projects that China's buying? What about those people? And by the way, it makes for a really sick population. When you just print paper and have an artificially strong currency, your food gets worse. Your ability to produce locally gets worse. Your society gets worse. Your middle class gets worse. So it's a huge problem. Now, enter capital controls. Okay, now this is what this episode is about. And this strategy by the United States has ramped up aggressively. This has become a big, big, big deal. Now, I would highly recommend this article by Michael McNair on capital controls. I'm going to click into it because what's happening with the Trump tax plan is fascinating. I'm going to read this bit out loud. Let me zoom in so you guys can see, but I'm going to read it out loud just for the audio listeners as well. Okay. With the withholding tax, balancing the scales. America stands alone among major economies in giving foreign investors a tax advantage over its own citizens. This isn't just unfair, it's self-defeating. Reinstating the 30% withholding tax on foreign investments could correct this imbalance while generating massive benefits. To start, it's worth noting that this isn't radical policy. It's a restoration of American normalcy. Until 1984, foreign investors paid this tax just like everyone else. We abandoned it over outdated concerns about tracking international money flows in the digital age, specifically fears that foreign investors could easily conceal ownership through complex intermediaries and nominee accounts, making proper tax collections difficult. Second, this policy would generate trillions in revenue, drawn entirely from foreign holders of U.S. securities rather than domestic taxpayers. For private foreign investors, this wouldn't necessarily increase their total tax burden. For example, the average statutory top person income tax rate in Europe is 42.8%. Therefore, European holders of U.S. securities would simply pay 30% to the U.S. government and the remaining 12.8% to their home country. The lost revenue would be borne by foreign governments. Given that most foreign jurisdictions already impose similar withholding taxes on their own securities, they would have limited grounds for retaliation. The U.S.'s large negative net international investment position further constrains potential retaliation measures. Third, this approach precisely targets a significant driver of our trade imbalances. This is the important part. Foreign central banks that currently pay no taxes while accumulating massive U.S. holdings. These institutions deliberately hoard dollar reserves well beyond what's needed for legitimate currency management, creating artificial capital outflows that mathematically force trade surpluses with the United States. This strategy is effective precisely because these central banks deliberately target their reserve accumulation toward markets like the U.S. that don't respond in kind and allow unrestricted capital inflows without reciprocal access or countervailing measures. Yet, if we introduce a tax on these holdings, these central banks have no superior alternative to treasuries, with European bonds yielding just 2.5% and Japanese bonds at 1.3% compared to the U.S. at 4.5%. Even if they wanted to sell, no other market has the depth to absorb their massive holdings. Rather than triggering a wave of liquidation, such policy is more likely to incentivize consumption in surplus countries. Okay, I'm going to skip to the bottom before I end. Finally, this approach offers strategic flexibility through America's network of tax treaties with over 60 countries. The 30% withholding tax isn't just good economic policy, it's the restoration of basic fairness in a system that has been tilted against American interests for too long. Okay, my job on this podcast is to break things down in simple terms. So let me break down what I just read. What America is trying to do is restore their middle class, restore their ability to manufacture stuff, really wane off how bad they need China to produce stuff. We talked about in an earlier show. China produces 78% of the stuff needed for us to make weapons. Okay? Meaning we can't even defend ourselves without China playing ball and producing stuff for us. They are so entrenched as the world's factory. Okay? They're the world's factory. This whole thing is wane off of China, produce stuff locally again, create manufacturing jobs, bring back a middle class. Is being the world reserve currency a good idea? Question mark. Do we want an artificially strong dollar? Question mark. These are all of the things at question and at hand. Pivoting from tariffs and saying, so I'll go back here. When Bessant says tariffs are now complicated and we've closed a deal, the deal is just let's pause tariffs for a second. And all of a sudden, there's a focus on capital controls. What capital controls are doing is saying, get your money out of America. We don't want to run a persistent trade deficit and you get a trade surplus just for you to trade up NVIDIA at 50 times earnings, just for you to buy penthouses in New York City for $200 million, just for you to acquire all the farmland in America, just for you to bid up all assets, leaving the people that are living paycheck to paycheck poor and leaving the people that already own assets way too wealthy. They're making more money than they should. They're getting rich just by owning the right things, not by doing the proof of work. And so by imposing capital controls, you're realigning where money is going. And you're effectively saying, hey, foreign investors, foreign central banks, you cannot stick the trade surpluses and pile them into this country, which leaves your currencies artificially weak and the US dollar artificially strong, which forces us to live in a trade deficit. This isn't a new rule. We're going back to the old rules. We're going back to the rules in the mid-'80s, which say you have a tax. And if you want to invest in this country and you want to deprive our middle and lower class from owning financial assets, you got to pay for it. You got to pay for it. Okay. Now, why does this matter as a Bitcoiner? I would say, not coincidentally, in a 13F filed, the Abu Dhabi Sovereign Wealth Fund disclosed owning almost $500 million of IBIT ETF. Guys, this is what I'm saying. The world is running a persistent trade surplus against the United States. Everyone, China specifically, is making trillions of dollars exporting goods into the US. You guys want to know one of the reasons I like broadcasting in a giant empty closet? It's because an American millennial working on Bitcoin in a giant empty women's wardrobe perfectly captures what we're living through. Americans have made out to be exorbitant consumers of everything. We've been beefed up and fed to just consume shit because the rest of the world is exporting all the shit they make into this country. And all we do as Americans is everyone's overweight and overconsumed with shit. Gucci bags, purses, phones, electronics, disgusting processed food. We're just fat pigs over-consuming shit. And so the U.S. is saying, fuck this. We are getting the raw end of the deal at this point. We should stop printing pieces of paper and trying to export it in exchange for real stuff. We should get back to proof of work, back to actually producing things for the real world. We shouldn't allow foreign central banks, foreign sovereign wealth funds to just plow their shit into our assets. And so they have to take their trade surpluses and they have to find a different way to store their money. They have to find a different way to store their wealth. The question is, where do they put the money? Where do they put the money? And the answer is gold and Bitcoin. Gold and Bitcoin. That's the answer. Okay. When you're reordering, so when I've said in prior episodes, why do I think that Bitcoin has the potential to decouple from the NASDAQ? The NASDAQ US stocks had such strong performance because they're being persistently bid up by trillions of dollars all over the world. Everyone is taking their trade profits and just plowing it into the S&P 500, plowing it into the Mag 7, plowing it into US real estate. And if the US's new policy is that's bad for Americans, that's bad for the middle class, that's bad for our ability to produce our own stuff, which, listen, you could say the strategy is good or bad. You could say it's working or not working. But the reality is, like, if we need to defend ourselves, if we want to be self-sufficient, we need to be able to make our own shit. We cannot just trust that people that historically have not liked us will have our best interest all the time. And so if it's take your profits and put it somewhere else, and you can open a Bitcoin chart, you can open a gold chart and see where the money's going. And when you see filings that you guys think the Abu Dhabi Sovereign Wealth Fund has a $500 million position in an ETF in America and they don't have any physical Bitcoin and they aren't mining Bitcoin, are you out of your mind if you think that's true? No way. This is probably a rounding error of their position. So you're seeing global capital flows be entirely reordered. And so since the last few weeks, Bitcoin has drastically outperformed the NASDAQ. Drastically. So I think Bitcoin and gold, anything with a fixed supply, anything that is physically governed by Mother Nature, where you can't print infinite amounts of it, that's provably scarce. And Bitcoin kicks gold's butt in every facet of being money. But the world is being tasked with, hey, guess what? You cannot just sell things to Americans in unlimited quantities and take your profits and plow it into our assets anymore. Because for one, we're going to start producing stuff again. So all of your trade surpluses are going to come down because Americans are going to start consuming American products. We have to. And for two, your profits have to go elsewhere. They have to go into neutral reserve assets. They cannot get plowed back in here. Okay. So now I go to my next one. Oh God, speaking of how bad I've been with running this podcast, let's see if you guys can hear this. I doubt it. I'm just going to get my butt kicked today, but let's try. Okay. No volume. But Treasury Secretary Scott Bessant tweeted out the important part. I apologize. I got to work on the quality of this stuff. I have no idea what I'm doing. I want to keep this podcast authentic and not super professional, but I mean, it's even pissing me off at this point. I got to be able to like stream with good quality and fucking share an audio clip. Anyways, that's for a different conversation. The point is, in this clip, Treasury Secretary Scott Bessant says the deficit to GDP is almost 7%, which only happens when the US is either in war or in a recession. So massive. And he states our focus is to grow the economy, so grow the GDP part, faster than the debt, faster than the deficit. That's how we will win and stabilize debt to GDP. This is a self-admission that real rates are going to be negative. Real rates are negative, meaning that, yes, you can get 4.5% from a US 10-year treasury, but inflation is going to be higher than 4.5%. Let's say inflation's at 8.5%. You're actually losing 4% every year. Yes, you're getting paid 4.5%, but you're losing in purchasing power 8.5%. Okay. So the point is the US 10-year, like long duration fixed income instruments from America, these are not going to be able to store your wealth and your purchasing power. If they're negative in real terms, your purchasing power is decaying. So long gone are the days of the 60-40 portfolio. Long gone are the days where you are a trade partner like China, you export stuff into America, and you buy the 10-year treasury. Okay. We've talked about this. The US is losing demand for its 10-year US treasury, for its safe haven fixed income instrument. And we've talked about how they're going to change the US supplemental leverage ratio. Here it comes. This is from FT. US set to cut capital requirements for banks, FT reports. US authorities are preparing to announce one of the biggest cuts in capital requirements for banks in more than a decade, the Financial Times reported on Thursday. Regulators were poised to reduce the supplemental leverage ratio. Listeners of this show, we've been spot on about this. I've been kicking and screaming about it for months and months and months, and here we go. Regulators were poised to reduce the supplemental leverage ratio in the next few months, the newspaper reported, citing several people familiar with the matter. The U.S. banking industry is optimistic that regulators will soon move to change how much capital they set aside against typical safe investments, particularly after the turmoil in the treasury markets last month. Ding, 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 ding. Let me blow this up so you guys can see it. Boom. U.S. regulators have flagged that the SLR, as meriting reconsideration, are mulling whether to tweak the rules formula to reduce big banks' burdens or provide relief for extremely safe investments such as treasuries. The Federal Reserve, Federal Deposit Insurance Corporation, and the Office of Comptroller of the Currency declined Reuters' request. So my message to you guys is this. You're seeing a self-admission from the Treasury Secretary that real rates are going to be negative. He's going to focus on growing the GDP more than the debt. You do that through inflation. You do that through money printing. Simultaneously, they're changing the rules so that they have an inelastic buyer of treasuries, so that banks can use unlimited leverage. Unlimited leverage. What am I going to pull up next? You know exactly what I'm pulling up next. The Cayman Islands, baby. Listeners of this show know exactly who's in the Cayman Islands. Look at this tweet from Luke Groman. Foreign UST holdings rose $133 billion March versus February. The United Kingdom, the Caymans, and Canada were 86 billion of that 133. China sold 19 billion. UK surpassed China as the second biggest US foreign creditor for the first time ever. Cayman Islands, with a population of 73,000 people, is now the fourth biggest U.S. foreign creditor at almost $500 billion. Okay? So the Treasury Secretary says real rates are going to be negative. Holding the 10-year is a scam. Yes, we'll pay you 4.5%, but no, you're not going to protect your purchasing power because inflation is going to be higher than that. I'm going to focus on the GDP. I'm going to erode the purchasing power of whoever's holding the 10-year. Well, guess what? Treasury market's going to be a fucking disaster. Who would own that? I'll tell you who would own that. If you give banks unlimited leverage by changing the rules, they will own that. If you continue to provide ungodly amounts of leverage to hedge funds in the Cayman Islands, do you guys think a population of 73,000 is the fourth biggest natural creditor to the United States of America? What does that signal? Absolute trash, garbage, mayhem, absolute disaster. Now, let's take a look at how this impacts markets. This is real rates. So again, real rates, guys, is if you take what the US rates are giving you and you subtract inflation. Because yes, if you're paying me 4.5% in dollars, great. But how much are those dollars going to get me? If the world around me is inflating at 10%, 4.5% is no good. I'm losing purchasing power. So this is the real rates in blue and gold in yellow. And what you can see is as soon as real rates started to drop, meaning these things aren't holding your purchasing power, everyone transitions into gold. Everyone transitions into gold. And so the point is, my point going all the way back to the fact that they're pivoting away from tariffs and the fact that they're now focusing on capital controls, the world has to find different things to own. So think people are going to be rotating out of the NASDAQ, out of US real estate. We're saying you're getting taxed if you pour your trade surplus into this country. And by the way, it has to be this way, guys. Money is supposed to be a neutral market good to store your time and energy. It's not supposed to be stocks of a country. It's not supposed to be farmland of a country. It was never supposed to work out this way. And so if we take a look at how the US 10-year is doing, look at this volatility. We've talked about how volatility is no bueno. Leverage and volatility don't work. The US banking system and US hedge funds in the Cayman Islands are incredibly levered, Look at the 10-year, already crawling back above 4.5, already crawling back above 4.5. And so the US, I hope this was, clear. The US is pivoting away from tariffs. Tariffs did not work. We're going to use capital controls. Well, I'm not a political podcast. They're going to use capital controls. They're going to say, we're putting a tax on all of the foreign investors. And you guys cannot take your trade surpluses, because here's what happens when countries dump their profits into the United States, buy our assets. What that does is it strengthens the dollar. Strengthening the dollar makes labor and goods and services here expensive, which basically locks us in to deficits again and again and again and again. And so the point is, keep your capital out of here. Go somewhere else. Stop bidding up Like the Mag 7 trading at 50 times earnings. Guys, that's irrational behavior. You cannot, no company is worth 50 times its earnings. That's blasphemy. That's stupid. But if you're China and you have $1 trillion and it has to go into the US, yeah, whatever, fuck it. Give me some more Google and Nvidia stock. But then, it becomes a national security threat. When it was China is your biggest lender via the 10-year US Treasury, okay, that's fine. Oh, China's the biggest owner of Apple, of Nvidia, of Facebook, of Amazon, of US farmland and US real estate? Oh, no, fuck that. Oh, no, fuck that. Now that's a national security threat. That's what's happening. China's the biggest buyer of our companies, of our land, of our real estate, and it's artificially strengthening the dollar, which leaves us trapped as the world reserve currency living in these deficits. Okay, I tell you what, you're getting a tax. What does that do to China? Well, if I can't put the money in the United States and I can't put the money in China, where should the money go? The money goes into a neutral reserve asset. The world is healing. Bitcoin, gold, Bitcoin, gold, Bitcoin, gold. That's what's happening. So just be on the lookout for this pivot away from tariffs. Let's see how much they talk about tariffs. Let's see how relevant they become. I bet in the next 90 days, they're not really brought up a bunch. Who cares? Who cares? What matters is Trump's tax bills all of a sudden got really, 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 really important. Trump is trying to pass these taxes on foreign trade partners. All of a sudden, that became the main character overnight. And we should really pay attention to this because, guys, I can't believe this didn't get more attention. Right after Trump is proposing these foreign taxes, 30% withholding tax, right after Abu Dhabi Sovereign Wealth Fund discloses a $500 million position in a Bitcoin ETF. All this capital has to be stored elsewhere. And the world is healing because the world needs money as your time and energy in an abstracted form. The point of money is to be able to save. You need to be able. Here's the thing that people don't appreciate about money. Let me tell you. It's not just about being able to pay my friend, pay my grocer, pay DoorDash, pay Amazon for goods and services. That's not what money is about. How do I take this money from the year 2025 to the year 2045? How about that? How do I transfer $1 million, not to Amazon, not to my friend, not to my business partner? How do I transfer $1 million 100 years from now, retaining its purchasing power, making sure I can still get the same amount of stuff? That's what the world is in dire, that's the demand for money. It's less about actually moving it transactionally. It's more about how do I move it through time? How do I create $1 trillion? If I'm China, how do I create $1 trillion worth of value for the world by manufacturing all of the stuff we all use and then move that $1 trillion 10 years from now, 100 years from now, and make sure I retain purchasing power? And if the 10-year treasury is not going to do it and the US isn't going to let me buy stocks and buy fucking real estate for obnoxious New Yorkers, I got to go gold. I got to go Bitcoin. I got to go gold. I got to go Bitcoin. The last thing I wanted to read you guys is this. So the US, one of the ways the US can shrink the way, so we have to reduce our spending, okay? This is health services here on the left. So this is all of the stuff. This is the largest outlays for the US. Okay. You see our defense spending, treasury, health services. The United States, I said in the last episode, the United States is very, very sick, a very obese population at this point. Healthcare, very expensive. Keeping Americans alive and healthy has become a crisis. It's a very, very bad problem. And obviously RFK Jr. and a lot of the current administration is trying to fix this by relooking at our diet, the ingredients. I wanted to read this tweet storm to you guys. Shout out to Luke Groman who put me on this. I'm going to read this one for you. I just found this fascinating, and this is how I wanted to end my rant. Big Pharma's worst nightmare just came true. Trump and RFK Jr. exposed a decades-long scam, bleeding Americans dry. The room fell silent when Trump revealed why we pay 10 times more than Europe for identical drugs. You won't believe what you're about to hear. A thread. For decades, Americans have paid the highest prescription drug prices in the world. How much higher? A breast cancer drug that costs Americans $16,000 per bottle costs just 1/10 that price in Sweden. The same drug, same factory, same company. A common asthma drug costs nearly $500 in America, but less than $40 in the UK. And the weight loss fat shot all the celebrities use, Americans pay 10 times more than people in other developed countries. Why? Trump told a shocking story about a businessman friend who called him from London. President, I just paid $88 for this fat drug I take. In New York, I paid $1,300. What the hell is going on? It's the same box, same plant, same company, identical pill. Here's where it gets interesting. Americans represent just 4% of the world's population, but generate 2/3, so 66% of pharmaceutical companies' global profits. This is not an accident. It is by design. For years, Big Pharma claimed these outrageous prices were the differences because of research and development. The truth, foreign countries strong-arm these companies into giving them rock-bottom prices. So who made up the difference? You guessed it, Americans did. The European Union and other nations told drug companies, this is what we're willing to pay, and if you don't like it, you cannot sell your drugs to our country. With no government fighting for Americans, pharmaceutical companies simply shifted their cost burden onto U.S. patients. It was a brilliant scam that went unchallenged for decades. Why? Trump revealed the uncomfortable truth. The drug lobby is the strongest lobby in America. Both parties talked about lowering drug prices, but neither delivered ever until now. Trump's new executive order implements what he calls most favored nations drug pricing. The principle is simple but revolutionary. Whatever the lowest price paid for a drug is in another country, that's what an American will now pay. Here's how it works. If a cancer drug sells for $100 in Australia, but $1,000 in America, the U.S. price drops to match Australia's price. Trump's estimate, drug prices will fall by 59 to 90% immediately. But what about those, quote, research and development, end quote, costs? Trump's solution is elegant. Other countries got to pay for it. No longer will America subsidize the world's healthcare while Europeans pay pennies on the dollar for the same medicine. During the announcement, RFK Jr. revealed something stunning. Every major Democratic leader for 20 years made this promise to the American people, yet none delivered. Why? Because Congress is controlled in so many ways by the pharmaceutical industry. There's at least one pharmaceutical lobbyist for every congressman, every senator on Capitol Hill, and every member of the Supreme Court. The industry spends 3 times what the next largest lobbying group spends. By comparison with other countries, the numbers are staggering. Americans spend over $1,000 per capita on drugs. The British only about $240. Europeans pay less than 1/5 of what Americans pay. Trump isn't asking pharmaceutical companies to lose money. The solution is equalization. So, and shout out to this guy, Carl Meta, for putting this thread together. My point is, listen, again, it's not a political podcast. I don't care if you agree or disagree with that thread, blah, blah, blah. My point is, all of a sudden, America, is focused on the health of its people. All of a sudden, America is focused. They're not optimizing for their big donors, for big pharma. Everyone knows that it's been rigged. Unbelievable amounts of lobbying. Why is there red 40 in my sport water? Get that shit out of my body. That's ridiculous. Why has it been there? Everybody and their mom knows it's been a bunch of lobbying, a bunch of garbage, a bunch of nonsense. Why? Guys, you have to ask yourself this. Why all of a sudden is the president of the United States saying, screw you pharmaceutical companies, screw your profits? That's not normal behavior. The reason is, look at this screen. Keeping Americans healthy is unbelievably expensive. If America had access to cheaper drugs, money from our paychecks would go back into the economy. All of us would start more businesses. All of us would buy more groceries. All of us would consume more apparel, consume more cars. It'd be better for the economy, and it'd be cheaper for the US government. If we were all eating natural food, if we were all eating natural ingredients, if we all had access to medication that wasn't 10 times as expensive as it's actually is to produce, then this drastically reduces the spend that the US government has. So I'm just trying to key you guys into the financial aspect of this. The US has to rein in its spending. It has to inflate away its debt. It has to pour money into growth. It's trying to take capital surpluses from global trade and get it out of this country. They're literally telling other countries, buy gold, buy Bitcoin. Buy gold, buy Bitcoin. Get your money out of our stock market. Get your money out of our real estate market. Stop buying up our farmland because Americans are going to produce stuff. And by the way, RFK Jr., get Red 40 out of everyone's diet. Get seed oils out of everyone's diet. We cannot have a fat, sick population. It's too expensive. It's too expensive. So pharmaceutical companies, sorry, we cannot take your lobbying anymore. You cannot run these ungodly, unjust profits by making everyone sick. You got to bring the prices down. And it's just fascinating. All of this is driven by finance, by money, by capital flows. Listen, am I saying that Trump or RFK or whoever's in office doesn't actually care about how sick our population is? No, they're probably good guys. But the reality is it's all finance driven. They're trying to they're looking at the balance sheet and they're saying one of our biggest expenses is taking care of how sick our population has gotten. Our population is fat and ill and gets charged 10x to just stay alive. I found that fascinating. I found it fascinating. I thought it would be interesting to share. So in summary, we're pivoting away from tariffs, capital controls. Be on the lookout for all of Trump's tax plan. Trump's tax plan is now the main character. The global trade surplus cannot come into this country if he's successful. Look out for a Bitcoin NASDAQ decoupling. Look out for gold and Bitcoin to continue to be the assets, the neutral, scarce assets to own. I think Bitcoin is going to severely outperform gold in this realm because you can't make any more of it. Demand goes way further in price discovery for Bitcoin because the supply is that much scarcer. Okay, end rant. And I apologize for my video quality and my screen sharing ability. Okay. We're on this camera now. Let's do some Q&A and then we'll end it, and I'll have better quality stuff next week. I have to. The time is now. The time is now. Let me move my camera over here so you guys are in the center of me. Okay, ready? Oh, geez. There we go. Was the tariff strategy ever a good idea to try, even in theory? I think my read on Trump, personally, is the guy just likes to test where the lines are. Okay? That's in everything he does. Again, politics aren't my thing. I've said this before. You know, some of you guys associate me with the left or the right or the this or the that. I've never voted for anybody, to be clear. You guys should know that. So not a political podcast. I'm not a politics guy. I vote orange. My vote is with Bitcoin. I think I can make the most change by open source software and building businesses. So not a politics guy. My read on Trump, he likes testing where the lines are. It's not clear to see when the treasury market will get too volatile, who's actually the marginal lender to the United States, unless you try shit. So to me, he took this maximalist tariffs position because he got the popular vote. It was, it was a red wave, as they say. Everything went red, and he felt like he had the backing and the vote of the people to go maximalist tariffs. I don't think they were ever going to work. I mean, it's a raw deal for everybody else. But I think he was trying to just test the lines and see when the treasury market would fall apart, who's the marginal lender to the U.S., where China is going to stand their ground versus when they're willing to give. And he learned a lot. Is it going to work? Is it not? I don't know. I don't believe that this, current financial system and the way the world is architected is meant to be long lasting no matter who's in office. I don't think it's an in-office thing. I don't think this financial system works with the right guy in the White House. I don't think that at all. I think very naturally, and by the way, you should listen to the words that they use. So they don't, like the Trump administration will never say, we're going to go out and weaken the dollar. They'll never say that. They say shit like, we're really excited about rebalancing the relationship with China, which means strengthening the yuan, weakening the dollar. You know what I mean? So I think they know being the world reserve currency is a raw deal. We shouldn't be doing it. Running these deficits is eroding the very fabric and core of this country. Having a trade deficit where everyone else has a surplus that just bids up our assets so that none of the citizens here, that drives a massive wealth gap. I mean, all of it's bad deal. And they're going to do what they can to get the capital out of the country and allow it to be. And the other thing that's really bullish Bitcoin is all of this is weak dollar. If you want to manufacture stuff here, if you want your GDP to be growing faster than the debt, all of this stuff is money printing, weak dollar, debase the debt. So anyway, that's my, but I'm not a politics blogger. I'm a fucking Bitcoiner. So take it for what it's worth. What does this mean? The U.S. will charge foreign countries a 30% tax if they hold U.S. securities, but if they buy long-term treasuries, there will be no 30% tax? Yeah, so basically the deal is this. 30% withholding tax. So what happened is the unspoken deal was basically this. The unspoken deal was, everyone's complaining about my camera. Should I just go camera off? My Wi-Fi is fine. Let me know if you guys just want my camera off. I could turn it off and I'll just be an icon screaming at you guys. The deal was very transparently, we'll run a trade deficit as the United States of America. We will be the world reserve currency. You guys have to buy our treasuries, lend us money in return. So you run a trade surplus, you buy our treasuries, you're basically lending us money, and the show goes on. Well, all of a sudden, these long duration instruments, they weren't preserving purchasing power because real rates negative. Meaning, yes, you're getting some yield by owning the 10-year, but inflation of the dollar losing purchasing power isn't compensating you. Your purchasing power is being lost. And so people like China went from the dollar was de facto backed by US treasuries to de facto backed by the stock market. And China was like, screw it. I'm just going to buy Facebook. I'm just going to buy Amazon. I'm just going to buy Google. I'm just going to buy Nvidia. I'm just going to buy Apple. I'm just going to buy scarce real estate in the US. And it's like, well, that sucks because now we're allowing you to have this giant trade surplus and you just own all the dope shit in America and we get screwed and there's a giant wealth gap in our country. There's no middle class. We can't produce anything. And so the deal is if you want to buy treasuries with no tax, you can go for it. But Bessant is admitting their real rate's negative. So China, I expect China to buy gold and Bitcoin before they buy the 10-year because the 10-year is paying you 4.5% and Bessant's effectively admitting real rates are going to be negative. Inflation is going to be over 4.5%. So if you're China and you want to buy the 10-year, you can, but you're the sucker at the table because it's going to erode your purchasing power. So they're saying, they're not literally saying this, but they're effectively saying, you got to buy gold, you got to buy Bitcoin. I actually think the fact that the United States established a strategic Bitcoin reserve is unbelievable given the way they're re-architecting global capital flows. Because if you're China and you're saying, okay, the US doesn't want me buying their stocks, doesn't want me buying their real estate, doesn't want me buying their farmland, I can't buy any US assets without paying an enormous tax. And if I buy the 10-year, the Treasury Secretary is literally telling me real rates are going to be negative. I'm going to lose purchasing power. So what should I buy? And then the US is out saying, by the way, we're auditing Fort Knox and we have a strategic Bitcoin reserve. Pretty interesting. Okay. Didn't the tariffs motivate China to come to some conditions? Not that I'm aware of. Let me know which conditions those are. But no. So far, China said, we're not moving. And by the way, we're willing to tolerate a lot of pain. We mean it. and we were the ones that folded. We folded. We had also, out of nowhere, all of a sudden, Bessant's going to fly to the other side of the world. We came to a 90-day pause. And when asked who's paying for the tariffs, he said, I don't know. We folded. All right. I've had enough of you guys. I'm turning my camera off. Many people don't understand debasement and believe that cash is quote unquote safe. They can't wrap their minds around the damage of debasement. What sort of disaster has to happen for them to understand? I don't think that it has to be a disaster. I think that this is one at the margins. People, I think Bitcoin's best marketing has been the fact that it goes up every single year on average by 50%. So I think people realize that if, it's like, how did you get that big house? How'd you get that nice car? How'd you afford that nice vacation? And you hear people, oh, I bought Bitcoin. So I think that's Bitcoin's best marketing strategy, is the fact that it is performant over the dollar, and at the margins, people will start to learn. I don't think that there is like one disastrous event where the global population is going to appreciate the fact that holding a money, doesn't guarantee you future goods and services. You have to preserve purchasing power, and you can own good and bad monies. I don't know. Everyone says, why are Bitcoiners focused on the price? Why aren't they focused more on the tech? The Bitcoin price is the most important metric we have. It tells us how much of the world is using Bitcoin as money. The $2 trillion market cap, the reason I opened the show with that is the world is taking $2 trillion worth of goods and services, and they're storing it in Bitcoin. When you say capital controls, what percentage of the market is being held up by foreigners, and how big of a correction do you expect and when? Okay, I should do an episode on this. A large percentage of capital inflows are going to the stock market and bidding up assets, but how big of a correction? The U.S. can't afford a correction. That's what I should do an episode on. The U.S. dollar is de facto backed by U.S. stocks. So the stock market can't actually go down, because the reason for that is because U.S. tax receipts, so U.S. capital gains tax receipts, that's our primary revenue driver to pay for our interest payments. And so if the stock market goes down, that means all of America is far less rich. They didn't make money. They won't be selling stocks to reinvest in the economy and buy cars and buy houses and start businesses. That means the U.S. loses revenue because they don't have tax receipts, which means, and you enter a debt spiral. And so when people say stocks only go up, it's because they have to go up. So the reason I think the dollar is going to weaken a lot and there's going to be a lot of money printing is because if China's not buying the stocks, it does not mean the stocks won't be bought. It just means it won't happen from foreign partners with massive trade surpluses. We will print the money and make sure that the stock market continues to go up. It has to go up. The US dollar is now de facto backed by US stocks. If the stocks don't go up, then the US doesn't get their tax receipts, they can't afford their interest payments, and it's a collapse. Okay, industry. Any thoughts on the Coinbase issues? Sure. I mean, I thought, first of all, it's unfortunate. I think the real crime is KYC. KYC is the real crime. I think it causes more harm than it does good. As running a massive business that has to KYC its customers, we still deal with fraud and we still face bad actors in our business. So KYC does not prevent issues for us in dealing with criminal behavior, but it does jeopardize, the privacy of our good users. It creates honeypots all over the world. So I'm not a fan of KYC at all. I agree with a lot of the commentary out there that security is, people associate security with just cybersecurity and just protecting a database or the cloud. And the reality is security goes all the way down to who you hire, who you employ, how your company culture is set up, what controls you allow throughout an organization. And I think this was, as much a people issue as it was a software issue. But I do commend Brian and Coinbase and how they addressed the problem. I thought it was pretty funny. Armstrong got out his iPhone and recorded a selfie video. He looked like me out there. I didn't know if I was an influence of that or not, because I think everyone does it nowadays. But I thought it was great that he just got out his phone, spent 2 or 3 minutes telling everybody the truth, both the good and the bad. So I commend that. I think leadership is going towards more authentic, personable, relatable communication. Nobody wants some like bald dude in a suit that they can never afford trying to justify a mistake that shouldn't have happened. No one wants that. So I like how they handled it. I think we run things at Strike a bit differently, in part for these reasons. We don't outsource any of our customer support to emerging markets or anything like that. We're a smaller team that is way more personal touch, and that this is one of the reasons. And I think, we got to abolish KYC. It's my take. Should all Bitcoin treasury companies show proof of reserves? Does the security risk of posting wallet addresses prevent them from doing so? I can only speak for myself as the CEO of 21. I'm not familiar with what security risks others reference. I don't know what they're talking about. At 21, we intend to show proof of reserves. We aren't familiar with the security risks that would pose to us. So, but I can only speak for myself and my business. So I'll leave that one there. The op return, do you think? Oh, a bunch of lending questions. Okay, I see a bunch of stuff here. I'm going to do some Strike lending questions. It looks like there's a bunch. And then I'm going to end it because I don't even have my camera on. Okay, lending. Will it be possible to open multiple Strike loans? Yes, it will. You bet your butt it will. You will be able to open multiple Strike loans by the end of this month, I believe. So it's going to ship any day now, like within the next 2 weeks. At the end of the year, when the principal is due, can I roll the principal into another loan and get another year of loan life instead of paying back the principal? Yes. We will also let you roll over a loan. That is coming really soon too. So over the next few months, you're going to have multiple loans. We're going to have cheaper pricing. We're going to have rolling over the principal. So let me just give you guys an example of how this can work. And then I'm going to caveat it with, this is not a silver bullet, but let me just give you an example. Let's say someone makes $100,000 a year, okay, as income. And let's say majority of their net worth is stored in Bitcoin. Okay. Let's say they deposit, and we're making an assumption here that they're using the Strike lending product and Bitcoin is $100,000 per coin. Okay. These are the assumption. They're making $100,000 a year. Majority of their net worth is in Bitcoin. Their Bitcoin is $100,000 per coin. They're using Strike. Okay. Let's say they take out a $100,000 loan on Strike. Strike is 50% LTV. So they take out $100,000 of cash against 2 Bitcoins, $200,000 worth of Bitcoin. Okay. Bitcoin has been compounding on average at 50% a year. Okay. So this person pulled forward their $100,000 that they're earning annually in the form of a cash advance via a Bitcoin collateralized loan, right? Now, all of their paychecks that they're getting, they get paid in Bitcoin directly. And so their paychecks act as a DCA. They don't need their paychecks to live because they're living off their $100,000 loan, right? Now, fast forward a year. Bitcoin appreciates 50% on average, so let's assume that. So the $200,000 worth of collateral that the user had with their loan is now worth $300,000 because it's gone up 50%. Their $100,000 salary that they've been using to just DCA into Bitcoin is now worth $150,000 because Bitcoin has this CAGR of 50%. So the total Bitcoin that they have, if you add up the collateral plus their income, is now $450,000. And they had a Strike loan for $100,000. So now when we say roll over the loan, here's what would happen. They would take out a new loan against the $450,000. 50% LTV means they take out a $225,000 loan. They take $115,000 of that new $225,000. They pay off the first loan, and now they have a $100,000 plus to keep it going. And so really, people don't understand the difference between uncollateralized loan and collateralized loan. Credit card debt, student loan debt, payday loan debt, that's bad debt. That's slavery debt. That's not good debt. Collateralized debt is different. If you have a collateral that's compounding at 50% a year, if you're able to borrow against that, as long as the performance of the asset is higher than your interest rate, you can just keep rolling these loans over. Now, let me tell you where people get in trouble, because I don't want to give you guys bad advice. What actually happens is, let's say they have $200,000 of collateral. They take out a $100,000 loan. Bitcoin goes up 10x, not just a mere 50%. Now, all of a sudden, their collateral is worth $2 million. They take out a 50% LTV loan. Instead of being humble, they borrow $1 million. They think Bitcoin's going to the moon. It's going to be the new money. The dollar's dead. They start yachting with chicks and buying fast yellow cars. And then Bitcoin goes through a bear market and they liquidate their life and it gets ruined. So what I will say to you is never, ever, ever, ever live a lifestyle that exceeds your income. That's my version of staying humble, is making sure that you're always making more than you're spending. And you should always make sure that your debt, listen, debt is like fire, okay? It can heat a home, but if you do too much of it, it could burn the house down, okay? So you have to be careful. I'm not advising everyone to do this, but just to show you guys what a collateralized loan can do to a life. If you have an asset that on average is going up 50% a year, and you have a service like Strike that's fighting to give you cheap rates, allowing you to open multiple loans, allowing you to roll over these loans, then you can actually pull forward your earnings. You can use your paychecks to DCA. And then as Bitcoin grows, you can refinance these loans. And the good story for the people that know how to use debt is they never sell Bitcoin. They never incur a taxable event. Their stack only grows, and they finance their life through borrowing against an asset that is so performant. And the fact that we at Strike can give millions or billions of people this experience, because we don't need to check your credit. You don't need to apply. All you have to do is download the app, deposit Bitcoin, and you're good to go. I mean, I can be giving people these loans in Ghana, in Nigeria, in markets that never had access to collateralized debt of this power. So that's obviously the vision. People are going to misuse debt. They're going to get greedy. I hate that, but that's the reality of life. For my listeners that tune into my show, be responsible. Do not create a lifestyle that you can't afford on your own. Do not create a lifestyle that needs sufficient debt to survive. That is a recipe for disaster. I did explain the bear market scenario. The bear market scenario is Bitcoin 10x's. Now the guy borrows $1 million and he thinks he's God on earth, and he starts yachting around the world. Bitcoin goes down 70%. He can't refinance the $1 million loan because he only makes $100,000 a year. He doesn't make $1 million a year, and he has to liquidate his life, and then he's sad. That is what we don't want to happen, and what I will never advise you to do. When will Strike's lending rates go down, and how low will they go? I think I'm going to have a really exciting announcement for you guys at the end of the month. And for many customers, it'll be single-digit rates. Will there be certain states that are never part of BTC-backed loans? No, there's just a varying degree of when we'll be able to access. Some states have really, really strict rules, and we're working through them. Some states have, easier ways for us to service the product. So we're going to get everywhere. But some states are harder than others. But by the end of the month, we'll also unlock. We'll be in, I think, between 80 and 90% of the United States of America, and with really, really industry-leading pricing, no rehypothecation, multiple loans, ability to roll over a loan. At some point over the next few months, we plan on having a proof of reserves for lending. So we're very excited about what we can empower for those that use collateralized debt responsibly. We're very excited about that. And I'm going to give a lot more keynotes and do a lot more education on the difference between collateralized and uncollateralized debt, how to think about this, why Bitcoin is different. I mean, just so you guys know, people are like, well, can't I take a loan against my house for 7%? It's like, yeah, but your house compound annual growth rate is 3 to 5%, not 30 to 50%. So, me personally, I'd much rather get a Bitcoin backed loan at 9%. Yes, my APR is 2% higher. Sure. But the growth of my collateral it's going up 50% a year. It's not going up 3% a year, right? I mean, the real estate market's not even outperforming inflation. Okay, cool. Well, that'll end it for today. Once again, I apologize for the video quality. I'm not a professional podcaster. I think that's some of the charm of this. For those that don't know, I'm the founder and CEO and chairman of Strike. I'm the co-founder and CEO of 21. I'm just a Bitcoiner, just like you guys. And I think it's charming and fun to not be like overly professional. This podcast is not my full-time job. It's a passionate hobby of mine to just be part of the conversation around the world and express myself. But, rubber meets the road. It's got to be digestible. If you guys can't see me and it's getting in the way of your ability to listen to what I'm saying, I have the resources to put out a quality product. That's not the point. So that will be my homework assignment for next week. I apologize again. Hopefully this, was digestible and relatable, and you guys can understand the pivot away from tariffs and onto capital controls and just, what the world has to solve, which is, moving away from someone being the world reserve currency and moving to neutral reserve assets. I think Bitcoin's it's a very exciting time to be working on what we're all working on. So thanks for all the support. If you guys, I'm getting pinged by the team. If you guys wouldn't mind liking and subscribing. So we crossed 26,000 subscribers on YouTube. I really, really appreciate it. It's unbelievable. We have over 1,000 live concurrent viewers right now on YouTube alone, which is nuts. So if you guys wouldn't mind subscribing, I'm going to have a lot more guests on. We've got a ton of content. My goal is to hit 100,000 subscribers this year. We're a fourth of the way there, a little through a fourth of this year. So I don't think it's impossible. So if you want to support me, there's no ads, right? There's no ads. I'm not selling, a premium version of the podcast or anything like that. Just a subscription. And if you do buy Bitcoin, download in Strike and giving us a try. That's the way to support me and the work I put into this stuff. So cool. With that, I will see you guys next week. I really appreciate all the support and what a fun and just couldn't be more us first episode of the Jack Mallers Show. I wouldn't have it any other way. Although there were some difficulties, that's exactly what this show is. Just a weird corner of the internet. So see you guys later. Take care.